How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week. We break down some of the analysis we have performed to give you guys a better understanding on how we are looking at tackling these markets. Now, if you go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions at all with regards to the analysis I go through today, just leave them down in the comments below. Now, the first pair I'm going to go over in today's video is the Euro US dollar. We can see here that price has recently traded us up and into an area of supply. Enough supply has been introduced to actually go on and deliver us with some clear bearish structure. Now, in the process of creating this bearish structure, we have seen some breaks in some protected lows that were formed within the bullishness that traded price up and into this area. So I'm led to believe that there has been a flip in the S&D balance, and I am expecting further bearishness in this market. How can we look to take part in this market in the coming week? Well, I would be looking to set my take profit target probably somewhere down at the higher time frame low here, as we have had a higher time frame penetration of a supply zone. So I'd expect to see a break in this low now and potentially further bearishness to actually clear some of this inefficient structure that we have on the left-hand side. So setting our take profit target just above the last protected low within the higher time frame bullishness would be a safe bet for a take profit. Now, in terms of an entry, where can we look to enter in from this market? Well, if we head over and go down to the 15-minute time frames, you can see how price has been respecting fair value gaps. So we just mark out this fair value gap here. You can see how price has traded perfectly into that. We do the same with this fair value gap here. Price has come to trade perfectly into that. And what we are seeing is price actually respect fair value gaps here as well. And price is traded into an order block here. Now, I am expecting a deeper correction. We head down to the 5-minute time frames. We have seen that price looks to be correcting itself within this higher time frame schematic. I want to see price trade all the way up and into this area, trading into this hidden order block. Once we have a penetration of this zone, I will then be looking to take this market short. Now, by getting involved all the way up here, it actually allows us to get involved with a very refined entry, as you can see. Stop loss of no larger than 10 pips. If you want it to be safe, we could actually set it higher, just above this fair value gap. Should price actually come to trade into this fair value gap here, we could set our take profit a few pips above, so 19 pip stop loss. Obviously, with that, we would have to refine our entry, so we could refine it to this point, giving us a stop loss of 14 pips. And then, as I said earlier, we would set our take profit just above the last protected low, which is down here. As a result, we would have a lovely risk reward ratio of a 1 to 19 from this potential short position here. So it's just a case of waiting now for price to trade up, for structure to break fractally to the downside. That gives us the confirmation of further bearish structure and confirmation that price is ready to put in the next bearish impulsive wave. And that's essentially when we'd be looking to get involved in this market. So I am now just going to wait patiently for price to correct itself, give us the confirmation needed in order to enter, and then get involved. But that's my analysis for the Euro US dollar market. Okay, heading over to the US dollar Swiss franc, you can see here that price has recently traded us down and into a demand zone. So the bias has flipped in comparison to the first pair that we looked at. And the reason for this is because the US dollar is now base, whereas the US dollar was quote in the previous pair. So with us having the bias and suggestion that the Euro US dollar is going to depreciate, that tells us that there's going to be strength in the US dollar. With this market wanting to go bullish, again, that tells us that we want to see strength in the US dollar. So in order for me to get involved in this market, I need to start to see formation of bullishness in order for me to be confident that this isn't just, a small corrective wave before a continuation to the downside. So I do want to see areas of interest being respected. So we do have an area of interest here. This would be an order block. We also have another order block here as a second point of interest. So should price trade into one or two, respect these areas and continue trading us higher, I would say that's enough confirmation to then look to go long in this market. This would be the fractal protected high within this bearish structure. We have had a break in this. So now I would say all that's needed is to see these areas of interest being respected and for bullish structure to be formed within this time frame. Once we have that, we can look to go long. We could be slightly preemptive, wait for price to trade in, break structure fractally to the upside, looking at the 5 and 15 minutes for those breaks within this corrective wave, and then obviously get involved. But I may wait a little bit longer before I do that, just to be safe. But a position might look something like this. We'd have our fractal break of structure here, and we would look to get involved on the pullback. So we would essentially repeat the first step, which would be to look at the impulsive wave that broke the structure, i.e. this one, just like we did with this here. We wait for price to pull back down into an area of interest, just like we have done here. We do the same here, and then we'd get involved in a position. But I am wanting to see bullishness within this market this coming week. Very quick and brief analysis here on the US dollar Swiss franc. That's all that's needed. I've given you 2 key areas here on the 1 hour time frame, so mark them out for yourselves. These red candles, they represent order blocks, orders that have been left over that need to be cleared and liquidated. And then obviously we can get involved in what should be a nice S&D flip to the upside. Okay, moving over to the Great British Pound to the Japanese Yen. We look at this market here on the daily time frames. I've gone ahead and marked out a hidden order block. Price is yet to actually trade down and into this. I'd like to see price actually trade down into this, clear this area before a continuation to the upside. As we know, the Great British Pound to the Japanese Yen is overall a bullish market. The Japanese yen is quite a weak currency, especially in comparison to the Great British Pound, with the Great British Pound being a major currency. So I am expecting longer term bullishness. We just need to find a good area to go long from. Now, obviously this hidden order block has been cleared, as you can see. So it could be that it's just come to liquidate this area once again, but I do feel that a deeper penetration of the order block lower may be at stake. But if we were to go from this one, again, we would need some kind of confirmation that price is ready to go bullish, which would be a break of structure to the upside. So we'd be looking at breaks in the last protected highs. I'd say this here is the last protected high within this bearish structure. So I'd want to see a clear break with a closed candle above this before I look to get involved in this market at all. We can see that price has pulled back recently down into this order block here. It's come to clear that, so we may see a new leg to the upside now here on the open come Monday. So I wouldn't be surprised if Monday we see some structure like this. So we could get involved in long positions. Is it slightly preemptive? Yes. But could we get involved in this market with some long positions in the coming week? Absolutely. Just all depends on your entry confirmation and what you need in order to get yourself involved in these markets. But I'll be waiting for a full candle close above this area before I look to get involved and take part in the market itself. But that's my analysis for the Great British Pound to the Japanese yen. Okay, just finishing off on the Great British Pound to the US dollar, so the cable. I was expecting this bearishness. As you can see, it happened, it played out. We just didn't get involved. We didn't get our entry that we wanted. I wanted to see price pull back up and into this area here in order to deem us a nice entry, one that was very refined. However, we didn't get that. Price traded down and into this fractal area of demand, absorbed price completely, and just continued to trade us lower. So unfortunately, that was an opportunity missed. However, we can look to still get involved in this market. It's just a case of waiting for price to pull back into an area of interest. So I have gone ahead and marked out this area here. This is a hidden order block on the 4-hour time frames. This right here represents a lot of bullish orders that need to be cleared as well. So there are a lot of areas at which we can get involved in buy positions. We just need to wait for price to pull back up and into them, deliver us with entry confirmation, which would come from a fractal breaker structure to the downside, and then we can obviously take part. Unfortunately, as I said before, we did miss out on this opportunity, but it doesn't mean that we can't take part in this market, in the coming week. With everything, it's just a case of waiting for the right entry confirmation and waiting for price to play into our hands. Now, some people may have decided to not wait patiently and gone ahead and placed a position after price absorbed this area, which is absolutely fine. It depends on your working strategy, but they may have, set their stop loss just above these last candles here. You would have seen that they would have got stopped out. So it's always important to wait for entry confirmation and wait for price to play into your hands in your analysis. It's okay to miss opportunities because there's always going to be more. I would much rather miss an opportunity than be 1% down on a trade or take a loss on a trade because I was preemptive or I didn't wait for my confirmation to be delivered. So it's a little lesson learned there. Don't worry if you miss an opportunity. These things will happen and it's normal. It's much better to miss out on a trade than take a loss. But that's actually going to summarize this Sunday sessions video. I hope you guys have enjoyed. As I said at the start of the video, if you have any questions or queries with regards to the analysis I've gone through today, leave them in the comments below. And if you did enjoy, don't forget to leave it a thumbs up. With all that being said, people, thank you very much for watching, and I'll catch you all in the next Sunday sessions video.